How to Invest Your First $1,000 Step by Step for Beginners. If you had invested $1,000 in the S&P 500 10 years ago, you'd have over $3,200 today. You didn't have to pick the right stocks. You didn't have to time the market. You didn't need a financial advisor or a six-figure income. You just needed $1,000 and the knowledge to put it in the right place. And that's exactly what this video is going to give you. I'm going to walk you through the entire process step by step, from understanding why you're not investing yet, to choosing the right account, to knowing exactly what to buy with your first $1,000. No jargon, no guesswork, no trying to sell you something complicated. By the end of this video, you will have everything you need to make your first investment. So let's start with the thing nobody likes to talk about. Step 1. Why most people never start and why that's costing them a fortune. Most people who want to invest don't invest, not because they lack the money, because they lack the clarity. Investing feels complicated, risky, and like something rich people do. And every time someone is about to start, they hit one of three mental walls. Wall 1. I don't know enough. I need to learn more first. This one is a trap. You will never feel like you know enough. The information available about investing is infinite, and some of it is genuinely contradictory. The solution is not more information. The solution is a simple, proven strategy, which is what we're building today. Wall 2, I don't have enough money to make it worth it. This one is factually wrong. Most major brokerages now have no account minimums and no minimum purchase amounts. You can invest $20. You can invest $5. The amount matters less than the habit. Wall 3. The market is too risky right now. There's always a reason the market feels too risky. In 2009, people said, don't invest, we're in a recession. In 2013, they said, don't invest, the recovery is fake. In 2020, they said, don't invest, there's a pandemic. In 2022, they said, don't invest, inflation is out of control. Every single one of those years, people who ignored the noise and put money in the market came out ahead over the following decade. The cost of waiting is enormous. Every year you don't invest, you're not just missing gains, you're losing the compounding effect. And compounding is the most powerful force in personal finance. It means your gains generate their own gains, which generate more gains, which means that first $1,000 doesn't just grow linearly. It grows exponentially the longer you leave it alone. Let me prove it. $1,000 invested in an S&P 500 index fund at age 25 could be worth over $20,000 by age 65 without adding another cent, assuming historical average returns. The same $1,000 invested at age 45 becomes about $5,000. Same market, same investment. A 20-year head start makes a 400% difference in outcome. The best time to invest was yesterday. The second best time is today. Let's talk about how. Step 2. What is an index fund and why it's the perfect starting point? Before we talk about where to open an account or what to buy, you need to understand one concept, the index fund. This is the backbone of the strategy we're going to walk through, and once you understand it, everything else becomes simple.
A stock is a piece of ownership in a single company. If you buy Apple stock and Apple does well, you do well. If Apple has a bad year, you lose money. Individual stocks are high risk, high reward, and they require research and ongoing monitoring. An index fund is different. Instead of buying one company, you're buying a tiny slice of hundreds or thousands of companies at once. Specifically, the most popular type, an S&P 500 index fund, tracks the 500 largest companies in the United States. Apple, Microsoft, Amazon, Google, Tesla, JP Morgan, Visa, all of them in one fund. Here's what that means for you. If any one of those 500 companies has a terrible year and goes bankrupt, it barely moves your portfolio because your money is spread across 499 other companies. Diversification is built in. And the historical performance? The S&P 500 has averaged roughly 10% per year over the long term. Some years it's up 20 or 30%. Some years it drops. But over any 20-year window in history, the S&P 500 has been positive. That is a remarkable track record. Even legendary investor Warren Buffett, widely considered the greatest stock picker in history, has repeatedly said that most people, including professionals, will never beat a simple S&P 500 index fund over the long term. That's not a knock on skill. That's just how the math works. Now here's the other thing that makes index funds ideal for beginners. The fees are almost nothing. We measure index fund fees using something called an expense ratio, the percentage of your investment you pay annually for the fund to operate. The best S&P 500 index funds charge as little as 0.02%. That's $2 per year on every $10,000 you have invested. $2. Compare that to actively managed funds that often charge 1 to 2%. On a portfolio of $100,000, that difference in fees costs you thousands of dollars every single year. Cheap, diversified, historically proven. That's the index fund. Step 3. Where to open your account. Okay, so you understand what you're going to buy. Now you need to understand where you're going to buy it. You don't go to a stock exchange and hand someone cash. You need something called a brokerage account. Think of it as a special bank account where you can hold and buy investments. There are dozens of brokerages out there, but for beginners, 2 consistently rise to the top: Fidelity and Charles Schwab. Both have no account minimums, no fees to open an account, no minimum purchase amounts. You can open an account with literally $0 and fund it whenever you're ready. Both have excellent mobile apps, solid customer service, and have been around for decades. They are the gold standard for everyday investors. To open an account, you go to their website, click Open an Account, and fill out some basic information: your name, address, social security number, and banking information to fund the account. It takes about 10 minutes. They'll verify your identity, and within a day or 2, you're good to go. We've linked both Fidelity and Schwab in the description below. Those links are free to use and help support the channel at no extra cost to you. Now, what type of account do you open? This is important. If you have earned income from a job, the single best first account to open is a Roth IRA. Here's why. A Roth IRA is a retirement account where you invest money you've already paid taxes on. Your money then grows completely tax-free. When you retire and take money out, you pay 0 taxes. 0. On every dollar of growth you've accumulated over decades. That is an enormous advantage, and it's available to anyone earning under a certain income threshold. The Roth IRA contribution limit is $7,000 per year as of 2024. Your first $1,000 should go here. Open a Roth IRA at Fidelity or Schwab today. Step 4. What to actually buy with your first $1,000. You have your account, you funded it. Now what do you actually type in the search bar? Here are 2 specific funds that are perfect for your first investment. At Fidelity, look for FXAIX. That's the Fidelity 500 Index Fund. Expense ratio of 0.015%, essentially 0 cost. No minimum investment. It tracks the S&P 500. At Charles Schwab, look for SWTSX, the Schwab Total Stock Market Index Fund. Also virtually 0 expense ratio. Also no minimum. This one covers the entire U.S. stock market, not just the top 500 companies, but mid-size and small companies too, giving you even broader diversification. Either one works. Pick the one that matches your brokerage. Type the ticker symbol in the search bar. Enter the amount you want to invest. Hit buy. That's it. You are now an investor. Step 5. The habit that makes this actually work: dollar cost averaging. Here's the last piece that separates people who build real wealth from people who buy once and forget about it. Dollar cost averaging. It sounds technical, but the concept is beautifully simple. Instead of investing $1,000 one time, you invest a set amount on a regular schedule, let's say $50 or $100 every month. You don't try to time the market. You don't wait for a dip. You just invest
automatically, every month, rain or shine. Here's why this matters. When the market is down, your fixed monthly amount buys you more shares at a cheaper price. When the market is up, you buy fewer shares, but your existing shares are worth more. Over time, this averages out your cost per share in a way that is mathematically favorable. You stop caring about whether the market is up or down today because you know you're in it for the long game. Almost every major brokerage lets you set up automatic recurring investments. Log into Fidelity or Schwab, find the automatic investment option, link it to your bank account, choose your amount and frequency, and set it to go on autopilot. Then leave it alone. Don't check it every day. Don't panic when it drops. Just let the compounding do its work. Putting it all together, your action plan. Here is your action plan. Number 1, open a Roth IRA at Fidelity or Schwab today. The links are in the description. It takes 10 minutes. Number 2, fund it with your first $1,000. Number 3, search for FXAIX if you're at Fidelity or SWTSX at Schwab and invest your $1,000. Number 4, set up automatic monthly contributions, even $50 a month, even $30. Number 5, leave it alone and let time do its work. That is the entire strategy. It is not complicated. It is not risky in the way that people fear, and it is the exact approach that financial experts, from Warren Buffett to the Nobel Prize-winning economists who created index fund theory, consistently recommend for everyday investors. The one thing standing between you and building real wealth is starting. So start today. Open that account, make that first investment, and subscribe to this channel, because next week we're going to talk about what to do once you've maxed out your Roth IRA, the next level of the wealth building ladder. And if this was the video that finally made investing click for you, I'd love to know in the comments. Drop a 1 below if you're opening your account today. I read them all. Let's go build some wealth.